How to overcome the problems in technical analysis. Always remember, it's not gambling. You can't go up and down with just dice in your hand. That's not how it works. You should study every technical aspect of the stock market. 1. Avoid system shifting. Switching from one system to another is one of the main problems in technical analysis. Traders do that when they couldn't find profitability. They switch from one system to another, in expectation of profit from that system, when ideally, they should stick to one strategy that suits them the best, learn it first and follow it religiously to brush aside any possibility of confusion and misleading. Number 2. Technical analysis is not constant. We need to change it according to conditions. People may have different opinions based on their feelings, tastes. When we talk about subjectivity in technical analysis, it means that there can be a large number of opinions about a particular stock depending on the strategy a person uses, or the time frame on which he or she sees the charts. Number 3. Factors that affect technical traders: emotions. In technical analysis, emotions can be one of the problems. It is more important to ensure that emotions affect their decisions as less as possible than to understand what the strategy they use. Execution and orders. It is very important, in trading, we place the right entry and exit points and spot the right stop loss so that we can make profits from the trade. Trade management. In trading, losses are always part of the game. And there are no traders having 100% accuracy, but we can control our emotions and use risk management measures to limit our losses. The risk-reward ratio is a key element for trading. Before we plan a trade, we must calculate how much is the maximum loss or risk involved in it. We must also understand how much reward or profit we can generate from this trade. 1:2 or 1:3 are ideal risk-to-reward ratio. Number 4. Dynamics nature of price patterns. Price action patterns are not like applying formulas directly. Most beginners think that the price action pattern's just what they studied in the books. So traders can find opportunities only if he modifies his setups according to changes in the market. If a beginner tries to by heart and tries to apply it like an examination, he or she may fail. Therefore, price actions give the best result only if we apply it according to the market scenarios. Number 5. Don't take quick entries with patterns. Don't jump into a trade just by seeing a pattern formation. Always wait for the pattern to form completely. How technical analysis become inconsistent. Sometimes the technical traders lose money in the stock market because of the lack of knowledge about the importance of caution a person should have in trading. Especially patterns like support and resistance, head and shoulders, cup and handle, trend lines, Elliott wave, triangles, pennants, and flags are some of the patterns that need to be dealt with very cautiously when it comes to entries, stop loss and exit points. Technical analysis and fundamental analysis. How they will help you. Fundamental analysis or technical analysis? Some people think which one better. If you want to know that, you should try to work with both these analyses together. When we combine the strengths of both of these analyses, it helps the investor to create bigger wealth and helps the investors to get a better direction of the market. Let us first discuss what these analyses are, and then we will discuss how to work with both in synergy. What did you mean by fundamental analysis? Fundamental analysis is the stock valuation method that uses microeconomics and financial data to analyze stock movements. The result of fundamental analysis is to find a natural value for a stock for better wealth creation. Features of fundamental analysis. It uses both financial and non-financial aspects of the company and also the macros of the industry as a whole. The financial aspect can be done by analyzing the financial data of the company, which can be found in the annual reports of the company. The non-financial aspect uses information such as estimates of its growth, demand for products sold by the company, industry comparisons, economy-wide changes, changes in government policies, etc. Steps of fundamental analysis. Macroeconomic analysis, industry analysis, situational analysis, financial analysis. What did you mean by technical analysis? Technical analysis is the study of chart patterns and statistical figures to understand market trends and pick stocks accordingly. One day the share price is up, another day it may be down. But over time, if you look at the stock price's movement, you may see trends and patterns emerge. The study of these chart patterns and trends in stock prices is called the technical analysis of stocks. When you learn technical analysis stocks, you will understand the big role that technical indicators play. So we understand that both technical and fundamental analysis are needed in order to yield the best results from the markets and in order to optimize the results.